Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
The picks this week have some good growth potential in them. Shiraz Mian and Kevin Cook is back in the house, and they're going to tell us about a company each that actually is displaying good growth and has good growth prospects. So we'll start with you, Shiraz. You've got a company called, is that DELAC?
Delek U.S. Holdings. It's an independent refiner, about 300,000 in refining capacity. The outlook for the refining space in general is fairly good, but Delek is better positioned because 2/3 of their feedstock, the crude that they buy to then convert into refined product, comes from this Midland, Texas area.
Okay.
And this is the Permian Basin, which has been at the forefront of all this shale oil production growth that has been in place over the last 5-10 years. And the reason why that's important is that even though in general parlance we refer to oil price and oil as one generic commodity, but in reality there are multiple grades of oil, and at any point in time they trade at different prices. So typically when we say oil prices are up or down, if it's in the U.S. context, they talk about the West Texas Intermediate.
Yes.
When it's in a global context, they talk about the Brent, which is similar to the WTI. But there's at least 8-9 other major grades of crude. So if a refiner is processing a grade of crude which is very cheap relative to the benchmark, then they literally have an amazing run. And that's what's happening with the Midland grade of crude, which is the crude coming out of the ground in the Permian Basin. 2/3 of Delek's refining capacity is processing this Midland grade of crude. The Permian Basin is totally just awash in oil right now. There's no capacity to take that oil out of the region to the Gulf Coast or other refining regions. As a result, the Midland grade is trading at a $10–12 discount to WTI. Cheap feedstock, meaning further expanded margins, and that's showing up in estimates. Very strong positive revisions for this year and next. The question is, when does this refining pipeline capacity bottleneck eventually end? And the idea is that perhaps by the middle of 2019, a number of the projects that are in the pipeline now will start coming to fruition. So very strong earnings outlook, very strong cash flow outlook. They pay a nice dividend. They raised it some time back. I expect them to raise them some more. With this flood of cash coming in, they're buying back their stock as well. So a smaller company, very impressive and visible growth trajectory, and a trend that should remain in place at a minimum for another year and a half.
Growth trajectory both on the top and bottom line.
Absolutely.
For this company.
Yep.
So that's another positive.
Yep.
Kevin, welcome back.
Hey, thanks for having me back.
Yeah, not a problem. You're talking about a company whose main product has to do with your teeth.
Yeah, we're going to go from oil to teeth.
Yeah. Oh, very good.
I'm starting to call Align Technology the Apple of straight teeth, just because it's such a unique company. And we just took 150% gains on it in my Healthcare Innovators portfolio. I almost wish I hadn't sold it, though. And I'm going to, do a lesson right here on buy and hold. So let's just take a look at Align, why it's a Zacks #1 rank right now. I'll point out that it has a value score of F, as you can see here on my screen, and we'll come back to that, why it has a value score of F, but why you should still consider buying it, hey, if it has a pullback to 325. So let's go down and look at the estimates here. Current year sales estimates, looking at 32% growth from just under $1.5 billion to nearly $2 billion in sales. Then the EPS, nearly, well, 21.6% growth on EPS this year. Those are some really nice numbers that we'll get into a little bit more. Just you can see that estimates went up strongly after their last earnings report, and the stock really popped. So let me show you what kind of growth we're talking about here. And I've got a slide from their recent investor day, and I'm looking at it here in my Healthcare Innovators portfolio because I tweeted out this slide. I put this slide on Twitter, and let me just explain this to you. So what's cut off at the bottom are Q1 of 2017, that's 73.6 million cases shipped, and then you see Q4 of 2017, 99.4 million cases shipped, and then Q1 of 18, 105.6 million cases shipped. This is so you can see the year-over-year growth of 43%, Q4 to Q4, and then the sequential growth here. I'm sorry, Q1 to Q1 is the year-over-year, and then the sequential growth of 6.2%. So this is what this company has done, in creating this revolution for people who want straight teeth, right?
Because their main product, for those who don't know, is this Invisalign.
Yes, yeah, the teeth straighteners. So they hit a milestone this year of 1 million teens finally wearing the product.
Wow.
And it seems to have this slow adoption because you have to get both the dental professional, the orthodontist, dentist, whoever, on board, as well as the family, right?
Sure.
And so there's this building of brand awareness, and so when somebody goes in to the dental professional's office and say, hey, I heard about this, will this work for me? So that keeps building momentum, and that's why you have nearly 30% growth here in the US, but internationally is why we continue to own it. I told my subscribers, every time this stock goes below 250 bucks, we want to buy it because it's going to 300. Well, it made new all-time highs today just below 350. We sold it above 330 because the stock was exceeding all the analysts' Wall Street price targets. But I sold it 15, 20 bucks too early, and I don't need to hit the top. But the point is this growth franchise is spectacular and it's unique. Let me go back to this slide from Invisalign. These numbers circled at the top are important because this is where they talk about utilization, and this number it's calculated by the number of cases shipped divided by the number of doctors to whom cases were shipped. So what you're seeing is dentists and orthodontists ordering again and again, right?
Sure.
Like they don't just try it once, so you're getting repeat business. Then let's talk about the international growth here. So the international growth is like 35 to 40% because they're going into places like India and China, where this is a solution that works. It's more cost effective. Mm-hmm. They have their software digitizes your mouth so that they get a perfect fit for the dental straighteners, and to be able to do that in remote and rural areas, where there obviously aren't going to be a lot of orthodontists in remote areas of India and China. If those, middle-class consumers can get access to this product, you're going to see that 30% growth continue for Invisalign. And let's talk real quick about valuation. Why does it get an F for valuation? Because it's trading anywhere from 60 to 70 times, right? But this is what great growth franchises do.
Sure.
We've seen it time and again, right? It doesn't need to. I call it the apple of straight teeth, but it doesn't need to have an apple valuation because it hasn't penetrated the market fully yet. And so, maybe the company will make $5 EPS this year. So you're paying over 70 times there, but those earnings are gonna keep growing. Looking at $6 next year, so that gets you a PE under 60. And I say, you want to be a buyer of this company anywhere between 300 and 325. If we get another pullback, but it doesn't look like it's going to happen because large investors just keep lifting the stock. And if you look at the SEC 13F holdings, you can see who the big holders are and that they just keep buying. So that's why I think this is still a long-term growth story. This stock could be $400 a year from now.
Well, it began this year on a pretty solid note.
Yes.
And it's been outperforming its industry here for over the past year at least.
Yeah.
Right? Which is why that F surprised me.
Yeah. Well, that's what investors are willing to pay for this growth. They're paying 60 times for 30% growth, which is a little bit upside down. You know, it's not the peg you want, but it's
Right.
still. But the competition. You know, you mentioned the industry. The competition is really nowhere to be found for these clear
Sure.
dental straighteners.
Okay. Thank you both for that. Do
Yep.
either of you own these? Either of them?
No.
I own Dalek in the focus list portfolio, but not personally.
Not personally.
But
Okay.
I could buy it at any moment.
Don't forget, more stock information on these two companies and others on our website, Zacks.com. All you need to do to look at it is get over to the homepage. With Shiraz and Kevin, I'm Terry Ruffalo.